Greetings in the name of Yahushua Mashiach, our King, our High Priest, Cohen forever through the order of Melchizedek, who intercedes for us to our Ancient of Days, Yahuwah. And my name is Malek Shalomo, and today I'm going to try and do a quick and as in-depth trade review of my Black Sun strategy. And I want to shout out Dan from Bookmap. So this presentation is for you. I believe you're gonna place it somewhere. So I'm gonna try and be as professional as possible, so anyone looking at this video could get some insight from this video, right? So I have my checklist here on the side. So I'm gonna use Bookmap replay mode, right? So the trade is almost about to be executed. So I'm going to try and explain the strategy before it happens. So I call it the Black Sun strategy. It's basically like a mean reversion trade, or like it's a rejection of the highs, right? Coming back kind of like to the mean and possibly breaking down to the next edge of price action. So not only is it coming back to the mean, it's coming back to the other edge of, let's say, the volume profile, but it's not really a volume profile trade. But let me just explain further, right? So price action is supposed to be around Camarilla R3, R4, or floor pivot R1. So I'm looking for a resistance pivot level, right? So those are resistance pivot levels. We have Camarilla R4 here, which is in a lower value relationship, which is the most bearish the Camarilla relationships can get. So any price popping up to this level is basically in the most jeopardy of getting rejected, right? So another thesis with this is that I'm looking at this as a possible Wyckoff theory accumulation phase, where after a selling climax, you get a automatic rally, which is basically like a short squeeze, or like just shorts covering their positions, right? So after the buyers are absorbing at the bottom, right? Not really here. I'm just kind of pointing it out, right? If buyers are absorbing at the bottom, you're gonna get it's like a bounce in price, right? Because heavy liquidity is happening at the bottom of a level, and you're going to get a bounce in price. And again, this is not right here. I'm just kind of specifying what an automatic rally is, right? So it's basically like a short squeeze, right? So the bigger the trend, the bigger the short squeeze will be, right? So bigger the trend to the downside. So that's the Wyckoff theory phase. It's a buying climax or uptrust in an automatic rally. So a buying climax is basically in an uptrend where you start they start taking profit, and you get high volume at the top of these wicks, and then you get like a sell-off, right? So let's see. We're looking for a Wyckoff theory location. If in a downtrend, sell at short squeeze, buying exhaustion, which is going to be somewhere around here, looking for a buying exhaustion somewhere around here, right? And if in an uptrend, sell at the buying exhaustion, right? Which is basically going to be at the buying climax, right? Look for absorption by the sellers. So basically, I'm looking for, I have these indicators here. This is the volume pressure. I believe it's the volume pressure. Right, this is just the volume pressure, the orange one right there. No, this one is the volume pressure. Yes, my bad. The orange one is the volume pressure. And nope, I'm making a mistake. The orange one is the volume pressure imbalance, and the future is the volume pressure, right? So what I'm looking for is some spikes down from the orange, which is the volume pressure, which I call it volume VPA attack. So I'm looking for the sellers to attack at a resistance level, right? So when I get that spike to the downside, I'm looking for that spike to the downside to be an attack of the sellers at a resistance level, right? So this right here is it's an absorption indicator, and it signifies like buying absorption, right? So as we move up here, it triggers when like this kind of stuff happens. So you see the absorption indicator is going off, so you get buying absorption kind of spiking right there, right? This one here is selling absorption, right? So you see the selling absorption indicator right there, and that spikes to the downside. All right, so basically looking for heavy passive sell orders just above price, iceberg sellers, aggressive offers on the ask, VPA dominance, selling spike, which I just kind of explained. This is VPA dominance is the fuchsia line, right? And VPA attack is the orange line, which turns into burgundy in its extremes, right? And VPA anchor selling spike, which is this, and we're looking for VPA rollover selling, which is it's a white line with a black spike to the bottom, right? And rising selling volume. So we're looking for rising selling volume here, right? All right, so that's enough in explanation right there. I probably took up too much time already. So let's hit play. Right, so that was the first attempt, right? A little too early on that trade. Let me just open it up a little more. Let me slow it down a little bit. Right, so this is the second attempt. This is a rejection here of second upper deviation. We have the Camarillo R4 level. So got the first 4 points right there, and then it pulled back on me, right? So what I'm using here is basically a trailing stop of around 12 ticks, right? It's a 9 tick stop loss. And when I enter here, two contracts, the first take profit is 4 points. And then as the trailing stop comes down just above this consolidation, it pops back up, and then I get stopped out, right? So that's basically the Black Sun strategy right there. Now, in this market environment, I've opted out of looking for like leaving my stops wide and looking for long or big plays. So that's why I kind of opted to take like a 4 point partial. My original target is going to be 10 points, but it's going to be trailing by 12 ticks, which is like 3 points, right? So any pullback of 3 points is going to stop me out. So when we got down to this level here, 3 points back, that's going to stop me out, which is kind of coinciding with the market basically, the consolidation here. If we break above the consolidation, then I should opt to just come out of the trade, right? Now to re-enter this trade, I could be aggressive and re-enter on, let's see. So what I look at is like, I could take this off now. So what I look at in my trading is like when we consolidate, we usually get something like this. We get some low volume tests of the breakdown of the structure, right? Now, if you look closely, sometimes it's more visible than others, right? But you're going to see, let me just see if I could, right. So let's say the breakdown of this structure is here at 57.97. Let's say 97, right? When we break down this level, you're gonna get a retest right here, right? So it's a breakdown of 57.97. It's gonna push down, and then we're gonna come right back up here and test, right? So what I usually do to get back in a trade if I want to be aggressive, wherever it breaks down, if it breaks down this structure right here, I'm gonna place like like a sell limit order right here, right? And if we get tagged in on the retest, then like most likely my stop is gonna be somewhere here or just above the structure, depending on how wide the structure is, right? So yeah, that's my black sun strategy, and I think I have another video to do, which is called a 360 fire. I think I did one of those trades earlier as well. So let's see if I could find the location of that trade and do another video. All right, y'all. So it's Malek Shalomo. Y'all trade safe and stay blessed.